Let's connect then with the management to talk a little bit about the business traction, the entry into zero brokerage segment, as well as the retail broking momentum and whether or not that's continuing. Vijay Chandok is the Managing Director and CEO at ICICI Securities and now joins us on the show. Thank you so much for taking time out. Now, Mr. Chandok, it certainly has been a good quarter for you looking at the Q3 numbers, but your market share on a sequential basis has been trimmed. Is this because of changes in the margin funding norms, or would you attribute it to something else?
Sure. Thank you so much for having me on this show. I'm sure by now, as you would have seen our results, we've had a good growth across different businesses. The revenues, profits, revenues up 47%, profits up 95%. Yes, we've actually, on a YOY basis, gained market share. Market share in equities actually went up by about 160 basis points. What you're really referring to is the change in market share that has happened on a sequential basis. The trimming of market share that has happened on sequential basis is actually a consequence of changes in the recent regulations that have come in place. What is interesting is that these regulations have impacted a specific kind of market opportunity, which tended to be very low yield. So while in a headline sense, it impacts market share, it has minimal impact on revenue. And that is what is reflected in growth in revenue. In fact, it would be interesting to also note that despite the reduction in market share on a sequential month-on-month basis, even in the equities business where this trimming has happened, we've continued to see an improvement actually in revenue run rates. So that's the sort of narrative that we are seeing on market share and the impact that it's having on our business.
Right. Now, going forward, the retail participation has shot up very considerably, and that's really led to a very strong performance for the company as well in your financials. But the question is this sort of just a rush that we're seeing towards the equity markets, and as we see things, really resume normalcy, people getting back to work, that this sort of a rush will fizzle out? Do you believe it's sustainable or not?
Indeed, retail participation has been on an upswing right from the beginning of this fiscal year, ever since the pandemic took place. It has been a global trend. It's been an Indian trend, and it's certainly helped our business. Interestingly, this trend continues even as we've entered into the early part of quarter four, and as a result of this. We have seen increasing participation of both newcomers as well as existing investors in much larger measure, which is reflected in increasing total number of, I would say, active customers in the market, increasing number of active customers for us. This number has gone up by more than 34% on a YOY basis for us.
Sure. All right. Now, 33% of customers are actually coming from outside the bank, which is great. Give us a sense of where they're being sourced from and how much of this is digital.
Yeah. So at the beginning of this fiscal year, we made an important pivot, which is pivoting to acquiring customers digitally and pivoting to acquiring customers through an open architecture. It is beginning to start taking its root within the company, and the numbers that you just quoted is a reflection of the traction that's coming on account of this approach. Most of our digitally acquired customers tend to be agnostic to the banking partner. So they invariably come from whichever bank they may be already having a pre-existing account. And therefore, we have started seeing on a run rate basis this number increasing in terms of their own our total acquisition that we are doing on a month-on-month basis. So today it has reached, for the last quarter, it has actually reached about 30% of our total sourcing, which is coming from customers who don't have an account with ICICI Bank. We expect going forward the mix to continue to increase in favor of becoming a lot more blended beyond ICICI Bank.
Okay. Now, how do you plan to compete with zero-cost brokerages as well? Those, for example, like Angel, who are aggressively eating market share right now. We know that you have ICICI Direct Neo, but how scalable is that from this point on?
So we are moving ahead in the market with a fairly agile mindset. I think there are different types of customers across the market. And we have come up with a series of plans to address these varying needs. We've come out with a prime plan, which sort of is very attractive and unique for a customer who's interested in cash, because it offers instant liquidity, and no other house on the street offers that facility. That's really found some very, very good traction, and more than 54% of our total new customers are all active customers are all opting for this kind of a service. It's unique, and that really has helped us compete very well in the market. And it is one of the reasons why we've been able to gain market share. When it comes to trading segment, we came out with a plan called Options 20 about a year ago. It was, in a sense, a kind of a trial for us to enter into a discount broking format. It did extremely well. It helped us gain market share and customers there. Encouraged by that, we came out with Neo in the month of December. Neo is the most competitive plan in the market. It is even more competitive than the traditional discount broking plans that exist. It offers zero broking on futures, 20 rupees on intraday trades and options. We are seeing a very, very healthy adoption in less than just about a month, I would say, of its launch. So we remain quite optimistic of how this plan is going to help us attract another segment of the market, which is the trading segment. So straddled with a series of plans, I think we are all set to take on the opportunity in the market.
Right. How exactly is the distribution business panning out, both on mutual funds as well as non-MF side? And are you, what kind of market share are you looking at taking?
Yeah, so the distribution business has started showing a sequential pickup that is reflected in our numbers. On the mutual fund side, we have started seeing an increase in market share. The way in which we are competing in the market with regards to mutual fund is we've come out with a very interesting new app targeted at newcomers to the market. It's called ICICI Direct Money. It's seeing a healthy adoption. Customers are liking it. We are adding new features to it. We are adding an Insta liquidity feature to it, Insta loan feature to it. We are pretty optimistic that that will help us keep the traction that we've already started seeing growing. In fact, market share on run rate basis for us has actually increased by almost 15-20 basis points on a YY basis. Revenue market share for us has gone up there. Similarly, when we talk of outside of mutual fund business, the traction continues to grow, particularly in health and life. And in both these areas, we are investing in building up traction over there. 20% growth we have seen in outside of mutual fund in the life and the insurance business on a sequential basis growth. So going forward, we remain invested and pretty optimistic about growth trends continuing.
Right. Cost cutting has been aiding your profitability as well. Now that we are more or less back to normalcy, will costs as well begin to pile up, or are you going to stick with the lean structure?
Yeah, so we have committed. We are committed to a strategy of demonstrating operating leverage. What it means is that our business model is morphing to ensure that whatever costs are incurred, we show an amplification in revenue. That's the philosophy and approach that we are sort of driving within the company. We were 55% cost to income about a year ago. We are down to 42%. We had guided a number. We have actually gone ahead of that number. We like the strategy. It is yielding dividends, and it's also something that comes naturally given the fact that we have a highly digital oriented business. So the ability to continue to move in that path is very much there. And therefore, going forward as well, we will remain committed in spite of normalization to ensure that operating leverage is continuously getting demonstrated in a much more and more efficient manner.
Mr. Chandok, pleasure having you on board. Many thanks for joining in and giving us a view as to how you've seen, customer acquisitions, how the equities business has been, and your digital power, digital sourcing as well has been powering your demand. That's the view coming in on ICICI Securities.